Clara, and I wanted somebody to help me out. Very short close within a 30 days. I wanted some cash to close, and she was able to help me out. So we have one more new venture coming up next year. Because of her, we're going to start a preschool in Santa Clara named after Sparklet's preschool. My wife will be aiding on. We will be starting on that. And thanks, Nilomi, for helping me out on that loan.
You're welcome, Nagraj. So first of all, I'd like to thank Nagraj for inviting me here today. This is not generally kind of a forum that I am used to. I work more directly one-on-one. So Nagraj, like many have spoken here today, is definitely somebody who pushes people outside of their comfort zone. So, and what two presentations to have to follow. So you guys did an amazing job. Mine will be very, I would say shorter and more condensed, but definitely would love to just take any questions or anything if you would like to come and meet me at my table afterwards. So having said that, non-traditional financing, alternative financing is kind of what I specialize in. And I hang my real estate and NMLS licenses at a brokerage that is local to the Bay Area. It is in San Jose, Santa Clara border. It's Stonecrest Financial. And so I predominantly do direct private lending. The one that scenario that Nagraj mentioned, we did that directly using private money funds. Oh, can you hear me now? Yeah. Okay, great, thanks. So using private money funds. And so what private money is it's non-traditional, it's not bank funds. These are investor funds where anything that requires a quick close, you want minimum contingencies, you have a decent amount of money that you're putting down. Any real estate in California is what we specialize in over at Stonecrest. And so with that, the three most, there we go, sorry. The three most popular loans that we help borrowers with are bridge loans, purchase money loans, either residential or commercial, as well as we have a direct line of credit product that we use. And so that's kind of what I'm going to talk about today. So what basically bridge loans are is if you are looking to buy a home before you're going to sell a home, then you would utilize a bridge loan. There are a few points that I have here on the slide to keep in mind, right? One is that, the term has to be less than a year. So we offer two terms. There's a 6-month and a 12-month term. You have to have a feasible exit plan. So the thing with our bridge loans, it is a consumer product. So you do have to be selling your owner-occupied property to be able to qualify for this particular bridge loan that we directly fund. And so for that, like I said, we have a 6-month and a 12-month term. The other key of our bridge loans is we don't have a prepayment penalty, and you can, depending on the amount of equity you have in a property that you occupy at this time, qualify for up to 100% financing. Okay, depends on the amount of equity. I do have here on the slide, it's usually 70 to 75%, but depending on, how much equity you have, how long you've owned your home, you can possibly qualify for up to 100% of the financing. Oh, I went the wrong way. You see how inexperienced I am at this? With bridge loans, there are the two options that I talked about that we offer, and you do pay points for a bridge loan. It is something that you have to understand and have a good amount of equity and have a windfall of cash coming in order for this to make sense. It's a fast close. We usually can close a bridge loan in less than 21 days, and we don't have loan contingencies. So the beauty of bridge loans is in a competitive market, you can get a pre-approval from me which will basically indicate that you have no financing contingencies and it is a all cash-like offer. So unless there is a buyer who is going to be giving 100% cash, like the example that Nagraj gave earlier of that home that sold for $4 million in cash, your offer will be the next best offer in line. Even more powerful than a dual income couple who potentially have strong income, but because it's a bridge loan and it is being cross-collateralized on another property, it is considered to be a stronger offer. So I think the advantages of a bridge loan are kind of self-explanatory, but again, it makes it so you can do a more phased move. It gives you more power, mainly in the purchase of what you're going to purchase next, but also it will help you with things like, I have a case study here. This was for an executive who was looking to basically buy a house in the San Francisco area. And this executive was able to get a dream loan that he probably wouldn't have been able to get his offer accepted on had he not used a bridge loan. And like I said, the main thing here is the exit. So the exit for this particular scenario was that he had 2 condos. So again, this is the beauty of being able to cross-collateralize. So we were able to cross on 2 condos that he had in the Bay Area, and then he had a stock liquidity event. And so after he bought the home, he sold these 2 condos, had a stock liquidity event, and was able to basically pay off the loan 100%. Here I have an example of a 6-month bridge loan and kind of the benefits of what you save. So with utilizing a bridge loan, you save on moving costs, storage unit, as well as the expense of renting an additional house. Now you pay the points and you do pay the additional interest rate of what a bridge loan is. It is interest-only payments. Right now our bridge loans are 10.45%. So you do pay the additional interest, but again, when you look at the additional expense of what you pay, really what you're considering is, like I said, it's that strong as cash offer. You eliminate any type of stress and you give yourself the fastest close possible. I mean, again, this is just a chart, to kind of compare. These are the different things that I've already talked about. I guess the main thing is strong offer and you get that dream home. Some other products that we offer when we say alternative financing, bridge is definitely one that's popular. When I was talking to Nagraj about this event, he said to me, Nilomi, most of the clients that I have and people that will be coming to the expo, they are not selling their homes, they're keeping their homes. So what does that mean? It means that maybe a bridge loan doesn't apply to a lot of the clients that Nagraj helps, but something to consider may be the line of credit. So now our line of credit product is also direct. It's private funds. You can utilize any of your portfolio that you're holding to secure a line of credit so that you can add to your real estate portfolio of properties that you're going to hold. Another good use case for our line of credit product is if any of you here in the audience are self-employed and you currently use a traditional line of credit with a bank, then you know that those lines of credit come with different types of covenants. Also, the other use of a line of credit utilizing your existing real estate portfolio would be to acquire more investment property, whether that be residential property, commercial property, multi-unit, whatever that may be. We also offer direct refinance opportunities as well. Sometimes there are certain clients, and this is more targeted towards investor property. I don't do any traditional refinance. This is just, again, business purpose refinance opportunities for working capital to buy another property. These are basically the 3 main products that I focus on that we do fund internally ourselves direct. Things to know about our line of credit, just more details here would be, it is up to 60% loan to value. Like I mentioned earlier, all private money products can be cross-collateralized. So it is 60% across your portfolio or subject property. Okay, you can use it like a true revolving line of credit. As I've mentioned prior, private money comes with points. So when people generally think points, The beauty of the line of credit is you're going to pay points only the first time that you put the line together. So if it is truly secured against a portfolio of properties that you're going to hold, you essentially get to use this line of credit for any future investments or working capital for any business purpose that you need with very less scrutiny. And you basically get to keep the line as long as it's revolving. You're using it as a line of credit. It's not permanent capital. You get to keep it for, as long as you want the line, which is a true benefit. There's no early closure fees. There's no debt to income ratio. So we're not really looking at tax returns. It's really a line of credit that's secured against the equity in the property. We can do lines of credit against primary residences. I'm working on one right now. As long as, again, there is an existing business and the funds that are going to be used to help with the cash flow of the business, you can use the line of credit for that purpose as well. We also offer a reverse 1031 exchange. You guys heard from Ron earlier, who specializes in the accommodations of the exchanges, and so we work with Ron and have for many years over at Stonecrest. And so basically a 1031 reverse exchange is very similar to the bridge loan. The bridge loan that I spoke about earlier is what people use for residential property when they want to buy before they sell. The reverse 1031 exchange is used in the same fashion. If a lot of times what happens is people want to sell commercial property and they don't know if they're going to be able to find a replacement. So sometimes it makes sense to actually do the buy first and then sell later and do it in the reverse order. And again, then the financial benefits of it, same benefits, less stress. You kind of understand what you're doing, so you're kind of putting things in a reverse order, but it can be very advantageous. We can also offer up to 100% financing because we're not only looking at that property at times. We can look at other properties in your portfolio, and this is where the reverse can make a lot of sense. So I talked a little bit about the direct from brokerage products that I'm able to offer, but I'm also a full service loan broker. So prior to coming to Stonecrest 10 years ago, I was a traditional banker, worked with 3 of the big banks in commercial banking. And so as a result, I have developed a lot of different relationships with banks across the country. And so, and the commercial or non-owner occupied, as well as owner occupied investor loans, I can work with nonprofits. I've worked with many temples here in the Bay Area to seek permanent financing. And these lenders can offer a variety of different loan programs and longer amortization terms. Also, if anybody is interested in learning more about non-recourse loans versus recourse loans, again, generally speaking, these conversations are more one-to-one, so please do come and speak to me, and I'll be happy to talk in more depth about those. Owner-occupied real estate is something, again, SBA financing, special purpose. Again, I don't know here with commercial property if anybody, my last name is Patel, so there are a lot of clients who are looking at gas stations and hotels. If there's anybody who would be interested in learning more about those types of options and what lenders are out there, what qualifications we have, I'd be happy to talk about those as well. I just wanted to actually refer back to this slide, jog my memory here. With acquiring commercial property, this can happen, not necessarily your first, but if this is your second, third, and you've gone through different cycles in the market, if there are any credit issues or any past foreclosure issues or reasons that you may have had to file bankruptcy, again, like I said, this is more generally speaking with more clients that have been in business for longer periods of time. But in the private world, as well as with some of these alternative lenders, these types of options are there. So just because, sometimes some unexpected life event happens and your credit is impacted, that doesn't necessarily mean that you cannot purchase property. You can. There are ways, there are lenders, and there are programs that can still help you rebuild. Oops. The other SBA loan programs I'd like to point out, again, like I said, I have relationships with lenders all over the country, as well as local lenders in the Bay Area, are the 504 loan program, which has helped many business owners get into their own commercial property. Again, this is a great way to build on the real estate net worth as well as wealth. Because you can get into some of these commercial properties with as less as 10% down, as long as you are going to occupy the property for 51% or greater for your own business purpose. Also, 7A loans are very popular for acquiring any type of business. If you are looking to acquire a business or do any equipment financing, there are CalCap loans. CalCap loans are, again, for certain different types of businesses that may have a harder time finding financing. Construction, I know we have a construction vendor here today too. Any type of development in construction, whether you're looking to build your ADU, you're looking to build a house, a hotel, multifamily, all these different types of construction loans are also different options that I would love to be able to talk to anybody about that's interested. CMBS, this is again non-recourse financing. The key thing to understand about CMBS loans, and again, if you have interest, we can talk directly, these are loan programs that are for income-producing commercial properties. They are more catered for borrowers who have at least 25 to 30% equity in their commercial real estate and have a decent, a higher net worth. But these are non-recourse, which means you don't have to give a personal guarantee. This is at the point where your commercial property kind of stands on its own, and that can also have a lot of tax benefits. I think with that, I maybe spoke longer than I thought I was going to speak. I literally thought I was going to be up here for like 5 minutes, but here I am. Hopefully I didn't go on too much. Thank you very much, Nagraj.
Thank you, Nilomi. I have a very well presentation. See, commercial properties, until I buy, I didn't know the value of the commercial properties. But once you buy, it's kind of a kick. I didn't even start the new venture, but already I'm planning for a second venture now.
That's awesome.
So you should have the connections when you want to buy commercial properties, because you need a quick close. Sometimes, like as she was saying, if you're already having a businesses and you leveraging the business, I always don't like to pay rent. It's all started because my wife runs a dance studio in Santa Clara.
Right.
She pays 4K rent, but which I don't like it. That's where I started, okay, let me go buy one commercial property for myself. But we didn't do a dance class there, we started to do a preschool.
Yep.
Okay. So now since we do the preschool, I saw the restaurant. Why can't I do a restaurant now? So if you want to start any businesses, you need to have a close connection, especially having like SBA loans. Another one, the bridge loans. Bridge loans is very good for residential properties. You don't need to sell, you can go buy the other property already. That one. And as you said, 35% is minimum down payment you need to buy for commercial properties.
35%, correct, yes.
She has a booth, and you can go talk to her, try to understand. Maybe you're not planning to buy now, but maybe in 3 to 4 years you want to plan. The right time to get started.
Yeah.
Thank you, Nilomi.
No, absolutely. Thank you.